Malaysia experienced its first COVID-19 cases in early 2020, and the government introduced the Movement Control Order (MCO) to control the spread of the virus. As a result, many businesses closed, global trade was disrupted, and economic activity slowed down. This led to a sharp increase in unemployment, especially in the tourism, retail, and manufacturing sectors. Many Malaysians lose their jobs and face reduced income. Fresh graduates struggle to find employment, and families experience financial difficulties in meeting daily needs. To address this problem, the government introduced wage subsidies, business loans, and financial assistance for unemployed individuals. As restrictions were gradually lifted, businesses reopened and economic activity slowly improved. This study aims to understand the impact of the COVID-19 on unemployment and the economy in Malaysia, evaluate government responses, identify remaining challenges, and explore ways to build a stronger and more resilient economy in the future.
Good day everyone, my name is Insyirah Binti Nadzir with metric number 304259. First, I will be explaining the unemployment trends in Malaysia during and after the COVID-19 pandemic. First thing first, the unemployment rate refers to the percentage of the labour force that is jobless. In simple terms, unemployment happens when someone is actively looking for a job but still cannot find work. During the COVID-19 period, Malaysia's labour market faced major disruption. Business closure, movement control order restriction, and reduced economic activity lead to job losses and shorter working hours. Many sectors, especially tourism, retail, manufacturing, and food services, were heavily affected. Before the pandemic, in the year 2019, Malaysian unemployment rate was around 3.3%, showing a stable and healthy labour market. However, once COVID-19 hit, the rate increased sharply. In 2020, unemployment rose to about 4.5%, and in 2021, it remained high at around 4.6% due to continued lockdowns and limited business operation. As restriction eased, we begin to see a gradual improvement. In 2022, the unemployment rate dropped to 3.9%. It continued to fall to about 3.4% in 2023, and by 2024, it reached around 3.2%. This showed that the labour market was slowly returning to pre-pandemic levels. This recovery was supported by economic reopening, government assistance programs, and reskilling initiatives. We also saw more opportunities in digital jobs and the economic work, which helped people find alternative income sources. Overall, Malaysia experienced a clear pattern, a rise in unemployment during COVID-19, a peak in 2020 and 2021, and a steady recovery afterward. This trend shows how severely the pandemic affected the labour market and how policy support helped the economy bounce back.
Hi, my name is Akif Danish. My metric number is 304238. I will be presenting an analysis of the effects of unemployment on Malaysia's economy during and after the COVID-19 pandemic, covering the period from 2019 to 2024. Our focus is on how the labour market shock impact the wider economy and its long-term implications. To appreciate the scale of the crisis, let's first look at the pre-pandemic situation versus the crisis peak in 2019. Malaysia was at near full employment with an average unemployment rate of 3.3%. At this stage, the economic focus was on structural issues like the graduate skill mismatch, not mass unemployment. However, by May 2020, during the strictest movement control order (MCO), the country hit an economic crisis. The unemployment rate surged to a peak of 5.3%. This was a historical surge, directly caused by operational shutdowns and the immediate collapse of aggregate demand. This sharp jump in unemployment led to two core economic problems between 2020 and 2021. First, output loss. Unemployment far exceeded the national rate, leading to a massive negative GDP gap. This means the economy was producing significantly below its potential. Second, multiplier effect. The problem quickly propagated. Job loss and income cuts triggered a powerful multiplier effect, quickly propagating through sectors like service and retail, further contracting overall economic activity. Our focus data point is critical. The 5.3% peak in May 2020 was the highest unemployment rate recorded in Malaysia since the 1998 ASEAN financial crisis, underscoring the severity of the shock. The direct macroeconomic consequences were several. Beginning with GDP contraction in the crisis quarter, Malaysia's GDP recorded a severe contraction of negative 17.1% in Q2 2020. This unprecedented drop was not coincidental. It illustrates Okun's law, which posits a negative relationship between unemployment and GDP growth. As you can see, high unemployment led to a sharp reduction in productive output, confirming this principle in the Malaysian context. The second major impact was the collapse of aggregate demand, AD. Unemployment caused a massive drop in household disposable income. The result was that consumers cut back drastically on non-essential spending, especially in tourism and food and beverage, F&B, which are crucial components of Malaysia's AD. This necessitated a strong fiscal response. The government was forced to launch large stimulus packages, such as wage subsidy, to cushion the fall in AD. While necessary, this led to a significant increase in the fiscal deficit. The key takeaway here is that aggregate demand fell sharply due to unemployment, effectively turning a health crisis into a profound economic one. Fortunately, the economy demonstrated strong resilience during the recovery phase. By 2022, the unemployment rate had fallen to 3.7%, driving 8.7% GDP growth, the strongest growth recorded in 22 years, fueled by restored consumer confidence and improving employment conditions. Looking ahead to 2023 to 2024, the unemployment rate is projected to stabilize between 3.2% and 3.4%, effectively returning to the pre-pandemic norm. This rapid recovery of the employment market acts as the vital recovery engine, supporting the domestic demand even amid a global economic slowdown. Despite the strong recovery in unemployment numbers, we must address the long-term structural scars left by the crisis. First, human capital depreciation. Workers and critically fresh graduates who were unemployed for prolonged periods, which is 2020 to 2021, face skill obsolescence. Their skills degrade, making it harder for them to re-enter the workforce effectively. Second, underemployment. Even with low overall unemployment rates, we face a risk of skill-related underemployment. This is where highly educated workers are forced to take jobs below their qualification level. This limits two key things. First, long-term labour productivity growth. Second, wage stagnation, even as the economy recovers.
Hi, I'm Aida, Binti Teoh, matrix number 304189. Now, I will talk about 4.0, which is the government's initiative to reduce unemployment and support economic recovery in Malaysia during and after COVID-19. During the pandemic, many businesses were forced to close and unemployment increased sharply. To address this issue, the Malaysian government introduced several fiscal, labour market and monetary policies between 2020 and 2023. So first, I will explain Employment Preservation and Job Creation Initiative. One of the most important programs is the Wage Subsidy Program or WSP. This program was implemented under Prihatin, Penjana and Pemulih. The main objective of WSP was to help employers retain their workers during periods of revenue decline. Instead of laying off workers, the government subsidized part of the workers' wages. As a result, more than 322,000 employers and 2.64 million workers benefited from WSP 1.0 in 2020. The total allocation for WSP 1.0 to 3.0 was 13.5 billion ringgit Malaysia. The unemployment rate fell from 5.3% in May 2020 to 4.8% in December 2020. Besides that, the government also introduced job creation programs. For example, Penjana Kerjaya under SOSO provided incentive for employers to hire unemployed graduates and retrenched workers. MyStep offered temporary job placement in the public sector and government-linked companies. From 2020 to 2023, these programs created over 250,000 jobs, with MyStep alone providing around 80,000 placements. Next, I will move on to economic stimulus and recovery packages. The Malaysian government introduced several major packages such as Prihatin, Penjana, Permai, Pemerkasa, Pemulih and Budget 2022. Overall, the total value of these packages exceeded 530 billion ringgit Malaysia. These packages included cash transfers to household, loan moratoriums, tax relief, grant and business
support for firms. One key program is Penjana, worth 35 million ringgit Malaysia, which included more than 40 initiatives under three main pillars, which are empowering people, propelling businesses, and stimulating the economy. These measures contributed significantly to economic recovery, where Malaysia's GDP grew by 8.7% in 2022. So moving on to workforce upskilling and reskilling, the government also focused on addressing structural unemployment, especially due to changes in technology and digitalization. Key programs included Penjana HRDF Reskilling and Upskilling Program, e-Latih, an online learning platform, strengthening TVET, especially in digital skills, automation, and green technology. By 2023, more than 500,000 Malaysians benefited from these programs. These initiatives helped improve workers' employability and prepared them for a digital and knowledge-based economy. Next is support for SME and entrepreneurs. Small and medium enterprises, or SMEs, account for about 48% of total employment in Malaysia. However, they were heavily affected by lockdowns. To support SMEs, the government introduced first BNM Special Relief Facility, the Gold Microcredit, and BSN Business Financing. In addition, the SME Digitalization Grant Scheme encouraged SMEs to adopt online operations and digital tools. These measures help SMEs remain resilient, avoid closure, and retain workers. Lastly, our explain monetary policy support. Bank Negara Malaysia implemented an accommodative monetary policy during the pandemic. The overnight policy rate, or OPR, were reduced to 1.75% in July 2020, which was the lowest in history. This policy lowered lending rates, made loans cheaper for households and businesses, encouraged consumer spending, helped businesses borrow for investment and operations. As a result, liquidity in the banking system improved, SMEs managed cash flow problems better, and overall financial stability was strengthened during the recovery period from 2020 to 2023.
So let me start with the underemployment. On the surface, it looks like more people are working for now, but if we look deeper, many workers are not actually in a suitable jobs. We can call it underemployment. So there are two main types of. First is the skill-related underemployment, where the graduates ends up in the jobs that do not match their educations, which is does not meet their qualifications. And for the second, time-related underemployment, where the people want to get a full-time job, but they only can find part-time jobs or temporary works. So according to the data from Dawson, even when the underemployment rate have fallen, the number of graduates working in low-skilled and semi-skilled jobs continues to rise. So that means that Malaysia is not fully using their educated workforce, which has led to low productivities and growing frustrations among the young graduates, and also wasting of the human capital.
The second challenge is persistent wage stagnations. Even though more people returned to work after the pandemic, the work growth didn't recover at the same pace. Since many businesses were badly affected by the COVID-19, so they are focused on controlling their costs and were reluctant to raise the wage. So at the same time, the rise of underemployment and gig work have weakened the workers' bargaining powers. As a result, starting salary for the university graduates grew very slow and even declined when adjusted for the inflation. So this means that people regain their jobs but not regain their jobs growth, and this has increased the cost of living pressure and even placed a greater financial stress on the household.
Structural instability of the gig economy. So what does gig economy really mean? It means a segment of service economies that based on the flexible, temporary and freelance jobs that often involving coordinating between the clients and customer offered by an online platform. So during the MCO, the lockdowns has related the growth of gig work, especially in e-hauling, delivery service, and over the time, this has become a permanent feature of the Malaysian labor market. And when the tourism and retail industry collapsed during the pandemics, many people lose jobs, and gig work becomes employers of last resort for many workers to just sustain their life and However, these gig workers have highly unstable, and many gig workers does not have EPF contributions, social protections, or even minimum wage guarantees, and their incomes depends completely on the numbers of the deliveries and trade that they complete, and they also do not receive any pay leave or job security. So this heavy dependence on the insecure gig workers has exposed many gig workers to economic vulnerability in future crises. The final challenge is skills mismatch. During the pandemic, many companies had to digitalize quickly in order to survive in that period of time. This has increased the demand for digital skills such as data analysis, e-commerce, which is online marketing, and IT support. However, Malaysia education system still produces many graduates with traditional skills that are not longer in high demand. So as a result, the labor markets have become a two-speed system, which is two-speed markets. So one side is the technology companies are struggling to find a skilled worker. Another side is many graduates are stuck in low-paying jobs and are underemployment. So this mismatch has slowed down the company innovations and also made it harder for the workers to move into a better job-paying career. And in some cases, some fresh graduates even unable to find a job because their skill does not match the labor market's demand.
In conclusion, unemployment shows how healthy a country's economy is, and COVID-19 greatly affects jobs in Malaysia. The unemployment rate increased from about 3.3% before the pandemic to 5.3% in 2020, but later fell around to 3.2% to 3.4% by 2024, showing gradual recovery. The government helps this recovery through programs such as the Wage Subsidy Program, My Steps, and Bajana Kerjaya, as well as stimulus packages, skills trainings, supports for SMEs, and supportive monetary policies. However, problems like underemployment, slow wage growth, unstable jobs, and skills mismatch still exist. Therefore, Malaysia needs to create a more quality jobs and strengthen workforce skills to build a more stable and inclusive economy in the future.